take a look at yesterday, Friday, October 17th. While we were trading ES, this was around 11:20. I sent a message towards saying, "Hey, be ready for a possible bounce, and that we will see a violent move either up or down because we're getting close to low of day, and obviously that's the level there." But I just want to talk about all of the signs that could have helped you catch this move. And, so we can see that yellow line tracks the low of day. So as we make a new low of day, it moves down a little bit. The green dotted line, that is the low between 9 a.m. and 10 a.m. And the red at the top, that is the high, that 1 hour candle. And those are important levels if you statistically look at it. And we can have a whole discussion around that. But you can see that we were above the VWAP, this white line, that's the VWAP. And usually when you spend the day above the VWAP, the chances are good that you're going to keep staying above it. When you spend all day below the VWAP, chances are good that you're going to spend the rest of the day below it. So there is a bigger than 50% chance. I'm not sure exactly what the numbers are, but if you go, take a quick look here. If we go back in time, so this is, as you can see there, this is the 15-minute chart. And you can see that the VWAP, uh, when you're above it, price likes to stay above it. Once you break below it, then price likes to stay below it. Now, if you have a choppy day, obviously you can just stay at the VWAP and go up and down. And that's why if you're staying at the VWAP, you just want to consider not trading until you have clear direction. So you can see that. So you're below it, and now you go up, you reject, stay below it, stay below it. Poke above it a little bit, come down. Okay. Here, once you break through the VWAP, sometimes you have a violent move up, but now we're above it. So now we'd like to stay above it. Okay, and we can go back in time. You can see we're above the VWAP. We break below it. We like to stay below it. Okay. Here, we're above the VWAP. We like to stay above it. Below the VWAP, we like to stay below. Okay. Um, just so I want you to see that pattern and just know that the odds, you want to stack the odds in your favor. Below the VWAP, stay below it. Okay. Um, above the VWAP, stay above it. Top, below, but just recognize these patterns. Now, obviously, here was a deuce related event. So break above, we'd like to come down, we stay above it. But then we had a news event and boom. So that obviously can change everything. Okay. So that's the first thing I want you to know. Now, this cloud here, this is what we refer to as the 48 cloud, that has similar behavior. So if you go and look at it, uh, when we're above it, we like to stay above it. When we're below it, we like to stay below it. Okay, so that's the thing. So the whole morning, very choppy, but you can see that we've been above the 48, above the VWAP. So when we approach it, we know that the odds are in our favor that we're going to bounce off it. Now, if we don't, then the day can turn red very fast. Okay, so that's where we start with. So we got that behavior, we're holding sideways. So now we're in high alert because we know that a bounce is likely. Not guaranteed, nothing's guaranteed. Market does what you want. Okay, so now we're like, okay, we're ready to press buttons. We come down, so we have the alpha zone. It is blue. It's moving down. Obviously, we got some trades there. We have the mean reversion bands. It's red. When the background's red, everything's aligned for a downward move. And we're ready for a possible bounce. Now, we know that it could come down as low as the previous day's level there. So we don't want to get in too early because then, we could be right about the bounce, but still blow the account because of the drawdown. And these candles are very big when you look at the ATR. So this price indicator shows the current price and the current ATR. Since this was last after hours, it's very low, but obviously we had a big ATR. Okay, so now we're ready for possible bounce. Okay, so high alert, give the kids candy, put on a movie, whatever it takes, so you can focus. Okay, so we're ready. Now, obviously, we're in downtrend, but we're looking for the bounce because those are the best ones. Now, look at this. We get what I call a stick save. So you can see we're moving down at a 45-degree angle, and then suddenly, boom, straight up, stick save. Now, what you want to look at is when you have a candle, 1 minute candle, that is opens up below the alpha zone, and suddenly it breaks right through the alpha zone, and it stays above it. This is telling you that we have a very likely bear trap here. Now, this is not our traditional clean bear trap where you have an impulsive move down and then a bounce. But all of these guys are still trapped. And so now when you have this big candle here, all of these guys are stopping out and everyone else is getting nervous. So as we make progress to the upside, all of these guys start stopping out, providing the fuel for the move up. Okay, so that's the first thing. Now you have this triangle, but I wanna talk about this vertical yellow line and just explain it a little bit more. This is something called candle by candle. Asia Rue brought that to my attention. I think he got it from Maple Stacks. I'm not sure about all of the details, but it's really powerful because what this does is this shows us that on the 10-minute chart, the 10-minute candle closed higher than the previous candle. Now, when you have a blue background line, that means on the 10-minute chart, that candle closed lower than the previous candle. And it's very important because when we look at the 1-minute chart, sometimes we forget about the higher time frames, but all about these indicators is about bringing the higher time frames down to the 1-minute chart. And if you look at the 48, that's a cloud based on 10-minute candles again. The alpha zone is based on the 5-minute time frame. So there's a lot of things in here that brings higher time frames down to the 1-minute chart, and that's part of why it's so powerful. So let me explain it a little bit better. So if we look at this and we look at the 10-minute time frame, let's just we're in the right place. So when we look at this, okay, so what happened was we were here, but then this candle there closed higher than the previous candle. Okay, so that's what that means. So this means that on a 10-minute chart, there's clear progress made by the buyers. So that's very important because that is what helps to change the sentiment and getting the bulls involved. Okay, so now that you understand that, now I want you to focus on the lighter yellow background. Okay, and let me explain that. This is saying that on the 10-minute chart, that candle is already above the previous candle, but the candle is not closed yet, so it's not locked in yet. So if the candle would have closed at this time, it would have been a brighter yellow line, but instead we have to wait for the 10-minute candle to close before we can come to that conclusion. So when you start seeing this background already changing here, you know that on a 10-minute time frame, that candle is higher than the previous one. And that happened because we have this big stick save. Then we have this. No, I got a quick scalp here. I think it was, I forgot. I think it was like 275 bucks or something. But it was a quick scalp here as soon as we broke through the alpha zone. Okay, and you can place many times you can place like a standing order here, stop limit order and long, and then grab that. Now you can see the stick safe. This There's no guarantee that it's going to keep going up, but we can see on the 10-minute time frame it looks good. But then you see the sideways action here, okay? And this is showing price acceptance. This is showing that the bears are not taking it back because they have to move fast if they want to take it back. Like if you have this bounce up and they push it down, trap these bulls, then you're going to have these guys stop out and get a big move to the downside. But when you see this holding your sideways, this is now getting all of the other bulls involved and say, okay, price acceptance, we're holding, let's move up. You can also see that the buying pressure, this yellow line here, shows that the bulls are winning. And you can see exactly it starts there. So it's two, sellers in control with a little bit of hope here, but it's not bright because the MACD and a few other things don't confirm that. So it is, but this is starting to flicker and say, hey, maybe there's some hope. And then immediately bright yellow saying that the buyers are in control. But then we also get more confirmation where the alpha zone inverts. So where the thick line is at the bottom, now it's at the top. Then we also get a signal, an entry signal, but we have the small yellow triangle on the 1 minute saying that the move is up. And then on the 2 minute chart now, the bigger triangle, on the 2 minute chart, we see the same thing. And as it spreads up, there was plenty of opportunity to get in on red candles and then sell on a big candle. Now, when you're in this pre-market level here, you could see a lot of profit taking there, and then it could go down. So that's why that's a first profit taking level. But you can see it held and it kept going. Now the next profit taking level would be this upper band. It would also be this red dotted line. But you see it kept pushing. We have Ray said, hey, this is all good. And then we also have this green band here saying that we have a super trend going on. And then as soon as the super trend went away, the trade was over. Okay. Um, Now then it kept going down. And again, we like to stay above the VWAP and the 48 if we spend the whole day there. But as soon as this goes away, you can lock in profits. Now, if you got in really low, you can decide if you wanted to keep running or not. But when it's so choppy, you want to maybe consider taking more of your profits. So it goes down. And again, we have another bounce here. We got another entry signal there. Keep going, keep going, keep going, keep going. So there's no short signal right here. We have a short signal, but again, when we spend all day above the VWAP and above the 48, you should know that the short signal is not what you're looking for. You want to know to ignore it because you know that the probability is saying that we're gonna bounce somewhere around this area. So you have to learn that and know that right now I'm looking for long. So even when I do get a short signal, that is counter trend. And you don't want to overstay your welcome. So if you take it, you want to lock in profits way quicker. But you also have to remember that when you get into a trade, you're going to not see the opposite because you're going to have a bias to confirm what you're doing. And even if it turns red, it's going to be hard for you to get out. So it's best to not go short and just wait for that long signal when you're above the VWAP, when you're above the 48 cloud. Again, not financial advice. This is just, in my experience, what works better. Hope that helped. If you like this video, give it a thumbs up, subscribe. Not really that I have many subscribers, but just trying to give back and help.